I'm Corey Johnson, and this is Bloomberg Technology. Coming up, Snap's IPO roadshow rolls into New York and is facing a slew of investor concerns. What investors are saying ahead. Plus, Uber goes into damage control after second PR crisis. In just a month, we're going to look at allegations of sexual harassment and gender discrimination at the startup. And the $350 million compromise. We're going to look at the new terms of the Verizon-Yahoo deal. But first to our lead, Snapchat parent company Snap kicking off its first U.S. investor roadshow in New York with a planned IPO next month. Snap has a lot of work to do. Snap's a red herring disclosing slowing user engagement and uniquely weak shareholder rights. Bloomberg reporter Sarah Fryer caught up with Sean Stiefel, a portfolio manager at Navy Capital, who attended the roadshow.
I think anything at $20 billion you have to justify the valuation for. Here the questions are around user growth as well as monetization. And I think they sort of dance around the issue of user growth, alluding to issues with the Android, and monetization they touched on lightly. But certainly as the story progresses and at this valuation, you're going to need to see some more metrics.
All right, joining us from New York is Bloomberg News IPO reporter Alex Brinka and Jennifer Fonstad, managing director at Aspect Ventures. Alex, how'd you get these guys in the street? What happened there at the IPO roadshow?
So Sarah and I were outside of the Mandarin Oriental in New York today, trying to grab investors like Sean to hear their take. And to his point, the top thing when asked, what was your big takeaway that's still on your mind? This user growth was the first thing that a lot of potential investors said to us. Like he said, the executives blamed it on Android, but I heard a lot of Instagram being called out by investors who point to the Stories feature that Instagram recently introduced that very much mimics Snapchat. Other folks brought up the new WhatsApp feature rollout where you can send images that mimic Snapchat. So yes, Snap is pointing to internal issues like needing to build out on the Android platform in its non-core markets. But, you know, investors still question the competition factor, and it will surely be on the mind when they're running their comps between the Facebooks and Twitters of the world.
Jennifer, the quote-unquote monetization issue was a euphemism if there ever was one. In other words, tons of people are using Snap. Not tons of people are getting generating revenue for Snap. What do you see as a monetization pathway for this company?
Well, I think the underlying opportunity for Snap is really around the data and the audience. So as you know, they skew to a much younger audience that is a content creating machine, and tapping into that and targeting that audience and being able to use that data much more effectively than a lot of their peers is really where the opportunity lies.
Is advertising, as you see it, the only real opportunity for these guys in terms of revenue? And there's nothing wrong with an advertising-only model. The history of media is mostly about that.
That's been the historic approach. There's a lot of different ways that you can monetize around what you're calling advertising. Very targeted marketing, and marketing dollars are getting more and more segmented. So I think a larger opportunity will be around how they use that data and selling that data to a whole host of different applications. Advertising being the largest bucket, and then how you skew down from there.
Alex Brinka, the valuations here for this business are astounding. For any business, based not just on its lack of profitability, but its lack of gross margins. I mean, the most basic concept of business is sell something for more than it costs, but that's not what Snapchat does. Did you get that kind of feedback from money managers that this might be a good business, it might be a bad business, but it's a very high price?
It is a very high price, and I think it's interesting, and a few people did note that we've seen the price come down. As we reported since October of last year, they were looking at valuations at around 30 to 35 billion. That's down now. The terms are set at a market value of about 16.2 to 18.5 billion. So you've seen those expectations come down as more information about the company has come out. So when you look at where they're spending money, obviously the profitability factor is the next step for them. They talk about that as phase 3. Phase 1 was kind of development, phase 2 was user growth and engagement, and phase 3 is going to be profitability. The biggest cost there for them is their technology infrastructure. And there was some new kind of conversation around that today. The company said it expects the cost of infrastructure, so paying for cloud and storage, to eventually decline as its two providers, being Google Cloud and Amazon, compete on pricing. It also said it's open to building its own infrastructure. So a little bit of new commentary around that right now, and that's so important because that's the bulk of their expenses right now, which, you know, outpace their revenue.
Jennifer Fonstad, I'll bet you would have no complaints if any of your investments could go public at 17 times sales.
That is an awesome number. I think what they're really banking on is that monetization and taking advantage of the massive amount of users and the massive amount of content. It's really up to them. It's their game now to prove that out. It's very common for startups to prove that out in the public markets where they feel that they can start to build predictability into their business. And that's going to be the name of the game. Investors, when you're in a public domain, care a lot about predictability, and being able to demonstrate growth whilst being able to predict and build that predictability into their business is going to be key.
Yeah, I mean, I still think this gross margin issue is a serious one, Jennifer. When, this negative gross margins over the last year, and I know the last 2 quarters looked a little bit better, but those, of course, are the quarters when they're dressing up the IPO, so I would discount, me, the former investor, would have discounted that into an IPO roadshow. But these gross margins were generally horrendous for this business. We're not talking about operating margins. We're not talking about what Alex Brinker was referring to with the expenditures on the cloud. We're talking about the most basic pieces of what they sell.
Well, I think it comes back to a couple of different issues. One is what Alex was referring to in terms of their fundamental costs infrastructure, and they've really been on a tear in terms of users and in terms of content growth, and that has enabled them, that has forced them to not focus on cost just yet until they got to a size where they could take advantage of scale and really think about both creating a competitive dynamic and thinking about creating their own infrastructure. Google also made a very similar exercise when they first started out, and they've built a phenomenal low-cost infrastructure as they started to focus on gross margins over time.
So, Alex Brinker, what's next in the roadshow?
Next, they'll be in Boston. They're heading that way tomorrow, and we will continue to be listening out before they head out to the West Coast. So this process will continue. They'll keep pitching their wares. They'll keep fielding questions from investors. And Corey, I also thought it was interesting today, they mostly just did Q&A for an hour. There wasn't a lot of presentation. So when you think about it, seems like they might feel like they've kind of expressed their message before, shares are scheduled to price next week on the 1st of March. So that would put a listing day on March 2nd. So that'll be where I am putting my focus for the rest of the next 2 weeks.
Well, you do that, Alex Brinker. We appreciate your work on this story. Alex Brinker, our Bloomberg News IPO reporter, finally with something to do with an IPO in the pipeline. And Jennifer Fonstad, Managing Director and Co-founder of Aspect Ventures. Thank you very much. All right, another twist in a massive insider trading case of gambler Billy Walters. U.S. prosecutors will allege in a trial next month that Walters made $43 million trading insider information in Dean Foods. But the law's like to show jurors that he had a history of engaging in illegal trading in Apple in 2013. The prosecutors did not reveal the details of those trades, but Walters was indicted last year, trading on tips that led him by a Dean Foods former chairman, Tom Davis. All right, coming up, Walmart benefiting big time from its Jet.com acquisition, but is this enough to help it take on online giant Amazon? And a reminder, all episodes of Bloomberg Technology now live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays, 5 o'clock in New York, 2 o'clock on the West Coast. This is Bloomberg. U.S. tech giants continue to face regulatory hurdles in the EU. This time, Microsoft facing European privacy probes over Windows 10. Regulators from 7 countries are concerned that even after making some privacy-related changes, Microsoft is still not in compliance with fundamental privacy rules. Microsoft coming out with a statement saying that it will continue to cooperate with the Working Party and national data protection agencies. All right, Walmart posted fourth quarter earnings which beat estimates, but that tells you more about the analysts than it does the company. Nonetheless, it sent the stock up 4%. It's the biggest intraday gain since May 20th of 2016. The world's largest retailer benefiting from last year's acquisition of Jet.com. For the first time, Walmart breaking out U.S. online sales growth, not the actual numbers, but posting 29% growth in the U.S. in the fourth quarter. Bloomberg Gadfly's Shelley Banjo covers Walmart, joins me now from New York City. And Shelley, I'm not so much struck by the Amazon comparison as I am the comparison to, I don't know, Macy's, Kohl's, Target, all those companies reported really poor sales in the fourth quarter, poor sales growth. Walmart showing something very different.
Sure, this was definitely a surprise for Walmart. I mean, they had been struggling for some time. There's always this comparison against Amazon. Walmart has been the world's largest retailer. The thought was, why can't it catch up to Amazon? And so this was finally kind of a step in the right direction.
Yeah, and to that, we don't know the actual numbers of how big that business is. They give us a percentage year-over-year growth, but not the actual numbers themselves. I mean, some companies will get used to that, right? Google never tells us how many clicks they have. They just tell us the change in clicks sequentially and year over year. But this seems like the kind of number they should be breaking out.
I think you're right. I mean, we know a little bit about it. We know that last year they did a little bit around $14 billion in sales. And so the bulk of that does come in online sales. The bulk of that does come from the U.S. So it's still a tiny number when you think about the fact that Walmart is almost $500 billion with a T, $500 billion in sales a year.
We heard from the Walmart CEO from the conference call. Check this out, what he had to say.
We continue to invest in e-commerce to accelerate growth. We're gaining traction and moving faster. We're the second largest U.S. online retailer by revenue, one of the top 3 online retailers by traffic, and our Walmart app is among the top 3 apps in retail.
No joke there. Is the suggestion that if they're not breaking out the actual revenue number, it's less than 5% of their overall sales?
That is something that people have kind of batted around. I mean, the characterization that they're the second largest retailer is also kind of up for discussion because that doesn't really take into account Apple, for example, or Hewlett-Packard. But if you think about, traditional retailers, Walmart is the second largest.
Yeah, and to that, what do we know about their traditional business, and is that going the way of the other retailers that had such a tough fourth quarter?
Yeah, I mean, one thing that's going for them, which is kind of this confluence of physical and digital, is this online grocery, and so that's included in the U.S. sales, and so that's when someone orders online their grocery, but then they actually end up picking up it in store, and Walmart does include that in their online sales, and so you're starting to see Walmart start to benefit from their brick and mortar, which is something they've always said is an asset to them compared to Amazon. But no matter how you cut it, they're still much smaller than Amazon. It just looks like they're starting to take e-commerce much more seriously.
I'm sure they did the responsible thing to help investors understand the business and broke out separately their organic sales of Walmart.com and separately told us what Jet.com did as opposed to just buying those Jet revenues.
Yeah, I mean, we still don't really know what Jet was doing.
Shocker.
Exactly.
Shocker.
I mean, they weren't that big. They were only a year or so out of the gate, and so we don't really know the exact numbers, but we know they weren't that big. What's more important for them than Jet sales, I think, is Mark Lowry, is that new CEO who has an eye and has toward e-commerce and is someone that could really change things up for Walmart.
Well, as we're showing this chart, we were just showing, it shows you that those online sales weren't about last quarter's acquisition at all, that maybe it's been a tick up in terms of the increase in the percentage growth of online sales for 3 quarters in a row now.
Well, Jet.com is not yet included in the comparable sales, and so we'll start to see that in the third quarter of this upcoming year. What this kind of shows you, though, it does reflect a few changes that they've made to e-commerce, and that is the global chart, but what they're starting to break up now is this U.S. e-commerce growth. So the 29% growth for them. Again, we don't know where the numbers are coming from, but it starts to show you what Walmart is reorienting to. It's saying, you know what, okay, global growth might have been a focus for us before, but now we're really focusing on U.S. When Walmart breaks out a number, it's just like Amazon. It does so very intentionally. That's what it wants to draw the market's attention to, and that's what they're saying is the focus going forward.
And maybe a little more focus than Amazon when their press releases come out and list like 40 different objectives from the last quarter that may be gone the next quarter.
Right, or when Amazon says, our profit could range from -$100 to $100 million. Who knows?
Right. I think what you see with Amazon is steering right towards the break-even point as they grow cash flow returns on the other side of the balance or the other side of the cash flow statement. Shelley Banjo, great stuff as always. Check her out on Bloomberg Gadfly. Terrific stuff as always. All right, Uber scrambling in light of its second PR crisis in a month. Details about how the company is responding to sexual harassment claims next. And a feature we'd like to bring to your attention, our interactive TV function. You can find TV Go on the Bloomberg, also on Bloomberg Launchpad for those of you lucky enough to have a Bloomberg terminal. You can watch us live, but also see previous interviews or dive into any of the securities or Bloomberg functions that we start to talk about, and you become part of the conversation by sending us instant messages during the show, distracting me while I'm on the air. Do it. IB me. Only Bloomberg subscribers, of course, get that privilege. Check it out, TV Go. This is Bloomberg. For the second time in a month, Uber is facing some backlash. Remember, CEO Travis Kalanick sparked controversy for his participation, in President Trump's business council after the first executive order on immigration was released. Of course, his company depends on a lot of immigrants who work hard as Uber drivers. Kalanick stepped down from that group, and not before a hashtag Delete Uber campaign was born. More than 200,000 people did indeed delete the app. But the latest crisis is an old subject, an old problem for Uber, a former engineer blogging about her experience of sexual harassment and gender discrimination with the company. This time, Uber acted quickly, promising an urgent investigation led by former U.S. Attorney General Eric Holder. Bloomberg technology reporter Eric Newcomer joins us right now. This is not a new issue for Uber. This is an issue that's come up quite a bit for this company.
Well, the issue of sort of whether it's a misogynistic, bro-y culture has certainly dogged Uber for a while. Travis's own comments haven't helped the company. He called the company Boober at one point. So
it was a GQ interview, right?
Right, exactly. Now, the sort of specific sexual harassment allegations and sort of how the company's human resources team handled it, that's new and moving the conversation forward, and certainly thrown the company into a bit of shock trying to figure out how to react.
Tell us about that blog post and what it said, and it was an interesting read.
Yeah, I mean, this was Susan Fowler, a software engineer working on site reliability, and basically she said that one of her managers, sort of as soon as she joined the team, had messaged her and basically propositioned her, said that he was in an open relationship, and then almost more troubling, she says that she took that claim to Human Resources, and they basically said he was a high performer, so they weren't going to do anything about it. She could change teams or sort of deal with it. So pretty troubling allegations, and there's a lot more in her blog post.
I mentioned that this is, you mentioned the Boober thing, and there's also been sort of issues about what's happened with the company's response to complaints against drivers, rape allegations against drivers, and what the company's done to deal with that.
Yeah, I mean, with the driver's side, there are millions of them, so, and sort of Uber's
millions of
drivers that they have to deal with, right? We don't actually know the incident rate, which sort of confuses the whole situation. But yeah, there have been questions about how they handle support, whether they sort of do enough background checks on drivers. So here we have, now 11,000 or more actual employees that they're worried about, but then they also have these millions of drivers where they've had to deal with all sorts of allegations there.
We refer to it in Tease as a startup, but I think that belies what this company really is. You mentioned 11,000 employees, maybe 1 million drivers all over the world. This is a big company that seems to have some aspects of baby company behavior, and I don't mean that necessarily in an insulting way, but going through this kind of like cultural definition within the business, even though it's operating at a very large scale.
Right. I mean, it's nearly 8 years old. Like, our best guess for revenue last year was probably like 5.5 billion. So it's a big business, but it's had to grow very quickly. The majority of those 11,000 employees, I'd say they joined in the last 2 years. So a lot of the processes are still getting created, and there's that sort of historical Silicon Valley, like, we don't need HR, and Uber's tried to build the processes, but clearly they don't have everything that they need to have.
Well, and culture takes hold in ways you can't always control. I mean, when I was an investor, I used to go around, when I could visit a company, if I saw employees had their stuff in a box, like in a cardboard box on the desk or under the desk, that meant they were changing desks so often that the business is still growing, and I didn't want to be short, and I might want to own the stock.
Right.
I get the sense that Uber is the same kind of place where growth is happening and change is happening really, really fast.
Yeah, but that certainly doesn't excuse, if the allegations prove true. And the company, Travis just spoke to employees today, and they're definitely agonizing over this. He apologized for some of the company's cultural problems. So, there are companies that grow fast, break things, but you still don't want to have problems like Uber seems to be having right now.
It's interesting, too, the response so sudden. Travis addressing the team, hiring Eric Holder over the course of a weekend. These are very big moves. I mean, as if addressing a team is really hard to do, but I think it's probably hard for a company to figure out something they do need to do.
Yeah, this is a company that's had a lot of PR nightmares, so I think, especially after delete Uber, they learned they need to respond very quickly. I also think they realize how serious this is. I mean, Uber is a software engineering company. They need to be able to recruit away from Google, Facebook. You know, Google's known to be one of the happiest places to work. Airbnb is certainly.
And also known to pay top dollar.
Right, exactly. So if Uber starts to worry that software engineers are just going to leave because they think it's a hostile culture, that will put them at a major disadvantage to their competition.
And finally, do you think this is a sign that Uber is going to respond to these things more quickly than they have in the past?
I mean, I think, you know, Eric Holder is about as top a gun as you could hire. So I think, you know, they take this very seriously and they're putting a lot behind it. Yeah, and we'll have to see.
Eric Newcomer from Bloomberg News, all the way in the other room. Thank you.
Thanks for having me.
Making a long trip here.
Exactly.
At least you got to stay dry while it happened. All right, thank you very much. All right, coming up next, Tesla's bulls drive shares close to an all-time high, but SolarCity's impact on the bottom line, cash flow burn, could be a nightmare. We'll discuss next. This is Bloomberg.
I'm Elisa Parenti, and you're watching Bloomberg Technology. Let's start with a check of your first word news. French presidential candidate Francois Fillon has regained some of the ground he lost to Emmanuel Macron last month. The latest poll finds Fillon gained 3 percentage points to a total 21%. Macron lost 5 points. The poll also shows far-right candidate Marine Le Pen with the most votes in the first ballot set for April 23rd. Meantime, Emmanuel Macron met UK Prime Minister Theresa May at London's Downing Street today as he tries to rally support from French expats in the British capital. Macron also addressed supporters at a rally in London. The pro-Europe candidate says in order to have access to the single market, it is necessary to be a member of the EU. The Italian Coast Guard released video showing refugees in a packed boat about to be rescued in the Mediterranean Sea. 630 people were transferred to the Italian Coast Guard ship at dawn. They included 70 women and children. According to the UN, more than 12,000 people have arrived by sea in Europe. And President Trump's America First policy has an admirer in Robert Mugabe. He is Zimbabwe's longtime president. He says the policy resonated with his own thinking. At 93, Mugabe is the world's oldest head of state. He says he hopes the U.S. will remove sanctions imposed more than a decade ago over alleged human rights abuses and electoral irregularities. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. It's just after 5:30 p.m. Tuesday here in New York, already 6:30 a.m. Wednesday morning in Singapore. I'm joined by Bloomberg's Haslinda Amin with a look at the markets. Haslinda, good morning to you.
Hey, Elisa, thank you. New Zealand kicks off Asia's trading day as always. Losses despite the rally in the U.S. and Europe. It's being dragged down by Fletcher Building and Fonterra. Also down because of A2 milk, down as much as 4.5%. Blame it on cheaper milk powder prices and expectations of a drop in sales in the second half. Now, looking ahead, futures in Australia pointing to a higher open. We're keeping an eye on Fortescue Metals, the last of Australia's big iron ore miners, out with earnings. In fact, it's out with earnings right now. First half profit coming in at 1.22, and it's announced a dividend of 20 Australian cents. Now, the company has a policy of paying out as much as 40% of profits to shareholders. If you take a look at the shares, they breached $7 for the first time in 6 years last week. The Bloomberg shows there's been a large number of price target revisions. And I'm Haslinda Amin in Singapore. Bloomberg Technology is next.
Our top story this hour, Snap's Investor Roadshow in New York ahead of an IPO slated for next month. Snap is asking for big-time valuation on the heels of weakening metrics. Bloomberg reporter Sarah Fryer caught up with Sean Stiefel, a portfolio manager at Navy Capital, who attended the roadshow and was troubled with the slower using growth.
That was a big concern amongst most people in the audience going into this, and I don't think that the actual roadshow addressed it. Pointing to problems with lower-end Androids is not addressing the elephant in the room, which is Instagram. So I think he needs to clarify that. Certainly, there's more questions than answers in that regard.
Sarah Fryer's in New York. She's our Bloomberg technology reporter and the other reporter covering the roadshow for us. We had Alex Brinka before, of course. Sarah, we talked earlier on Bloomberg Radio, and you said you thought the sentiment from investors was pretty strong coming out of the meeting.
It was a packed room. Of course, the he that Sean refers to is Evan Spiegel, who got really good ratings from the people who watched the roadshow. They said that he was polished and confident. But you're right. There were these concerns about user growth. He's not the only person who thought that Instagram needed to be mentioned a little bit more by Snapchat as a threat. They were mentioning that it was all Android, and a lot of the people leaving the meeting thought that they need to be a little bit more clear about exactly how much the Facebook competition impacted Snapchat growth.
Well, what do you mean it was all Android? What is that referring to?
So in Snap's prospectus for the IPO, they explained their slowing user growth was just a problem with their Android version of their product. There's something that they've since worked on, and so that implies that it's a one-time issue. If the issue is in fact something to do with the competition from other players, then it's going to become clear in the next couple quarters, and when we see their user growth, if it's still slowing.
Yeah, but it wasn't just slowing in one quarter. I mean, it was slowing. It's been slowing quarter after quarter after quarter. I mean,
that's just normal, though. I mean,
right? It's just normal. But if they're coming up with a new excuse for it, that sounds weird.
I think what people want to see from Snap is that they're not going to just be a niche product, that they can actually change the way people consume media in a broad way, not just among a younger set of users. Other questions from the roadshow, people were asking Snap whether they've been able to break into a broader market, and Snap was explaining that their users are very broad-based. Other questions were about infrastructure. Now, Snap has very high losses compared to its revenue. They are reliant on Google and Amazon paying them for cloud storage to sustain their app's growth. Now, that was another big point at the roadshow. They said that eventually they think the price will come down and they will benefit.
$890,339 is how much the company spent on personal security for the IPO, or for the CEO of the company. On top of that, you had these special class shares that leave investors with no shareholder rights whatsoever in terms of voting rights. Was that a concern you heard at all from investors?
That was definitely a concern we heard more at the London roadshow, which took place on Monday to kick this off. People were worried about, why are we buying into this company if we were going to have no voting power, no control? That is extremely rare, almost unheard of among stocks listing here. But Evan Spiegel is really just starting out doing what a lot of his peers had ended up doing after listing for a few years. Remember, Mark Zuckerberg took some voting power away from his shareholders last year. Same has happened with Google and their founders.
Yeah, it's hard to get my head around those numbers. $890,339. It tells you a lot about the company, I think. Sarah Fryer, thank you very much. Bloomberg Technology, Sarah Fryer, as always. Our on the radar this week, Tesla earnings. This stock has been flying ahead of a Q4 earnings report due after the bell on Wednesday. It'll be the first report where the company announced its $2 billion deal to acquire Solar City. Elon Musk, of course, the largest shareholder of both of those companies. Dana Hull joins us right now from Tesla with a preview. And you had a great piece about how the analysts on Wall Street have just kind of thrown up their hands on how to include Solar City results in these results.
A lot of people are waiting for more guidance because the deal with Solar City closed in late November, so you basically have a month of financials to kind of incorporate. And some analysts have just said, you know what, forget it. I'm going to sit this quarter out. Let's get more guidance.
I think that's insane. because Snap. SolarCity was a public company.
Right.
They've got financials and very detailed financials going back for years and years and years. They know exactly how the business works. They know exactly what the cash flow metrics were of those businesses. They shouldn't need, if they're real analysts, hand-holding from the company. Say, ignore everything that happened before. We're going to tell you what's going to happen in the future.
Yeah, I think what's interesting is that only 3 analysts who cover Tesla have any experience covering SolarCity.
But they got to go back and read the Qs and the Ks and do their own. I mean,
I'm not arguing with you.
I know. I scream at the heavens. That's what I do.
I'm just saying. I think one of the other questions is it's not clear how does SolarCity fit into Tesla? Is it its own business unit? Is it part of SolarCity? I mean, is SolarCity part of Tesla Energy, or is SolarCity its own business unit? Are they going to break both of those divisions out, or are they now one division? No one really knows.
Yeah, and the numbers could be greatly affected by that, not least of which the cash flow. I mean, SolarCity, Tesla's been a business that's had actually negative and noticeably poor free cash flow results, burning through hundreds of millions of dollars in most quarters. SolarCity, however, is much worse in terms of burning through free cash
and the
flow.
promise of the merger was that we were going to see cost savings and synergies. Elon Musk promised that there'd be $150 million added to the balance sheet and $500 million over 3 years. So I think a lot of investors want to know, okay, what is the synergy here? Are we going to see this solar roof this summer? What's happening with the factory in Buffalo, New York? What's happening with the solar plus storage plays that they're trying to do together?
And indeed, the notion there, the Buffalo, New York factory is the panel. They're making panels there?
Well, solar cells and panels, but also the solar roof that Elon unveiled last fall.
This new product that who knows what that's going to give them. It's also interesting in terms of how these companies are going to come together, because it gives the company something else to focus on than the actual shipment dates for the Model 3. Where do we stand? That date has been falling back and falling back and falling back over the course of years. Where do we stand with that right now?
Well, the latest is that volume production of the Model 3 is supposed to begin in July, with shipments slated later this year. But I think the big question is, where are they on that timeline and that ramp, and what are they talking about in terms of volume? I mean, at one point, Elon said he thought that they might sell 100,000 to 200,000 Model 3s this year. I don't think anyone on the street expects them to hit that. So what is the latest? I mean, we're still trying to find out if the factory is ready.
So what you just said is interesting. Not that everything you say isn't interesting. Let me be very quick, Dana. But it's interesting that you're suggesting that because Elon Musk has made so many predictions over so long and not been able to live up to those predictions or promises what the company's going to do, predictions is kind, that nobody even believes it anymore.
Yeah, I mean, I think he routinely makes comments on calls or publicly that are sort of wildly ambitious, and then he scales them back. And so the question is, like, people want to know, where are we on Model 3? But I don't think anyone actually really expects them to sell 200,000 Model 3s this year.
Very interesting. There's some corollaries with the White House. I think it's interesting as well. Does he really mean what he says? Dana Hull, really appreciate your time, and thanks for your hard work covering this stock. Well, coming up, forget intuition. We're going to talk to a VC who uses data to guide investments on a level never seen before in venture capital. That is next. And a feature we'd like to bring to your attention, interactive TV. You can find it at TV Go on the Bloomberg, not only watching us live, but also see previous interviews, dive into any securities from the Bloomberg function we talk about, and you can become part of our conversation by interrupting me during a live broadcast. Stump the Chump, IBme on the Bloomberg. Check it out at TV Go. Well, Facebook and TransferWise are teaming up. TransferWise? Yes, it's an international money transfer startup, and announced a Facebook Messenger bot that'll let users sign up for foreign exchange forex transactions over the chat platform known as Messenger. The service is available for payments to and from the U.S., Canada, Australia, UK, and Europe, eventually hoping to expand to 50 countries and 600 currency exchange pairings that TransferWise supports off of Messenger. Oh, forget intuition. Signal says a redesign of the way venture capital does early stage investments using data on levels maybe never seen before. It's the first real-time technology to screen top engineering talent and look at their movement. Signalfire CEO Chris Farmer was on the radio with me a few weeks ago, and I was just blown away by what you guys are doing. Describe to me. So let's do this kind of chronologically. How do other companies do venture capital? How did you do venture capital investing before you invented the Signalfire methodology?
Right. So, I mean, most venture firms start to dig into different markets, and then they'll go around to conferences, they'll go meet with influencers and experts in various domains, and basically run around asking to be directed to potentially interesting companies.
Let's talk to people and find out what's going on.
Finding the needle in the haystack. Right. By comparison, we start from first principles on what we think are the most important things in any given market, and then we actively and proactively track those things in real time.
Give me some examples of some data that you track.
So we track everything from consumer behavior, spend, engagement on apps, those types of things. We track the movements of talent inside the tech and venture industry.
Well, let's stop there.
Yes.
Tell me about that.
So the talent is the lifeblood of the tech world. And engineering talent in particular is the most fluid commodity. People vote with their feet every day on what companies they join, whether they think their options are going to be valuable, whether they want to stay at a company. And it's reflective of the culture, the prospects of the company, and many other variables that are critical to building great companies.
So you track to see how do you track to see where these great engineers are going?
Well, we don't go into all the methodologies of what we do, but we track over 10 million different...
Just ignore the camera. The camera I keep putting my hand in front of, ignore that one. Ignore that one over there.
Over 10 million different sources. There's things all over the internet of where people are going, from company web pages to fundraising profiles to regulatory filings and social networks and everything in between.
And you have this in a... Well, let me show you my Bloomberg terminal. Okay, so when I log into this computer right here, I have a special launch pad set up, and it looks like this. Shows you a ton of information. You can see it on that screen over there, and you can see I can see what the S&P 500 is, what's red is what's down, and what's green is what's up. On the left are all the major indices. There's details on a couple of stocks over there, and some earnings stuff, and so on. And I've got over there, I've got kind of earnings growth of different companies, and I get that all in a second.
Yes.
Does your screen look like that as a venture capitalist?
Yes, a lot like that. We have
crazy.
Over 6 million companies.
6 million companies that you're tracking. And will you change your investments based on that kind of data that's just popping up on your screen at a given moment?
Yeah, I mean, it's different than the hedge fund industry that's more, able to trade live on an exchange because you have to be invited into companies.
Right.
And so you have to solve for 5 different things to win. You have to see things early, and so the system certainly helps us to see that.
Right.
We also have a network of about 50 advisors that serve as effectively scouts for the organization. And then we have to analyze the companies and make the right investment decisions. So that's the judgment element. That's still a human element.
And so that's not a data thing. You're not doing data analysis to figure out the value of a company.
Not so much to figure out the value of the company. You use it to do comparables analysis for sure, to see whether this is the best team in the industry, how far downfield the competitors are, that type of thing.
But fundamentally, if you're doing that, you've got to rank the quality of the engineers through your own intrinsic notion of that. And Warren Buffett, who famously bases all of his investments on intrinsic value, also says there's no methodology to intrinsic value. It's just kind of figuring out what you think something's worth.
Yeah, and it also radically differs depending on the sector. So in a semiconductor company, it looks very different than what are the key sort of values versus a social networking company versus a transactional business like Uber. So
does this also mean that you've got a more diversified portfolio because you need to sort of weight these companies differently based on what's happening in the market?
So I don't know that it impacts the diversity of the portfolio, but you certainly have to take different approaches to each different sector. And so everyone asks what the most important data source is. It's the combination of all the different data sources, and the weighting of what the importance is depends on what sector you're pursuing.
And I've got to imagine, on some level, this has got to help you, and I don't mean this in a pejorative way, but it's got to help you raising capital, because you can go to pension funds and endowments and say, we have a distinctly different approach. It is thus.
Yeah, I mean, I can't get into the details on fundraising, but I can say that being massively differentiated from all the other venture firms and having a totally novel story is very helpful. But on Fund 1, people were very skeptical. How can data be used? Can you still win? So you also have to solve for that problem. You have to have the magnetism to win. You have to be able to add a lot of value to the companies. And so this doesn't just start with sourcing and monitoring. It goes all the way to helping portfolio companies. So, we build systems that directly plug into the applicant tracking systems for recruiting for our portfolio companies and have real-time alerts on when people are likely to change jobs and those types of things.
What do you mean real-time alerts on when someone's likely to change?
So we actually extend all the way out to Chrome plugins for our portfolio companies so that the founders and the recruiters at all of our companies can gain access to the visibility into where there are potential opportunities for recruiting.
So you are sharing in the same way that someone who's smart might spend the money to get a Bloomberg terminal on their desk. You're essentially giving this data feed to the companies you're invested with, so they get the strength of that tool.
Yeah. So this is as much about helping the companies win as it is about finding the companies and making the investment opportunities. And then we have a network of 50 advisors that are all wired into the system, similar to how you might look at Uber. There's an advisor version, there's a portfolio version, as well as this sort of God view that we see centrally.
You're more Uber Black than Uber X, I'm just going to say. All right. Signifier's Chris Farmer, thank you very much. I really appreciate it. It's just interesting company. Oh, coming up, there's now a price tag attached to Yahoo's massive hack disclosure. $350 million is the cost of those hacks to Yahoo, at least. We're going to discuss where the merger stands next. This is Bloomberg. Well, it was a fire sale because Yahoo was nearly burning with hacks. Verizon acquiring Yahoo's internet properties for $350 million less after some security breaches were revealed. The company's now valued at about $4.5 billion in cash, at least that total deal is. Brian Womack covers Yahoo for Bloomberg Technology, joins us right now. This deal is a better deal for Verizon.
A little bit. I mean, I think some people were thinking it could be a bigger discount. I'd heard, $500 million, even $1 billion. Been some of the, parlor games. How much less would this be? $350 million is less, but I think it's sort of relatively small. It's a haircut. It's not a big,
What's $350 million between friends? That's a lot of money.
No,
I totally disagree. That's a lot of money, especially because this is just for the $4.5 billion gets them everything, right?
Yeah. Well, look. At the end of the day, I'm just saying that is what folks were thinking. We could be seeing that much of a discount. Hey, look, at some points we thought, is this still going to happen?
Right.
After the hacks, there was serious questions about whether, they can make this work. This is a big deal. Not only one hack was exposed, but two. And this is the core of what they're doing. Consumer trust, and this was in question.
There's two issues, right? There's one which is, what do they know and when do they know it? Did they tell Verizon? Was this part of the negotiations? Did they keep this secret after they already knew about it? What do we know about that?
Well, I think at the end of the day, we know that a lot of this has got to have some kind of resolution. At least that's what sort of analysts were saying is, look, if
of course. But my question is, did they tell Verizon about these hacks before the deal went down?
From what we understand, in September, that was when the first deal was, the first hack was sort of revealed.
Right.
This was first relayed well after that. It was announced in July. This deal was announced in July after many, many months of negotiations. And then, boom, we all wake up one Monday, or I guess in the afternoon one day, and find out, wow, massive hack, over 500 million people. And then 2 months later...
We're not suggesting for a second they had to wake you up at your desk, even though you're always the first one in the building. So I said there are two things, right? So that's one thing, what do they know, when do they know it? In terms of the relationship between Yahoo and Verizon, that's certainly very important. But the other issue is, what does this do to the Yahoo brand? Do consumers say, you know what? I'm not going to give Yahoo my email information when I go to Yahoo Sports. I'm not going to let them track me when I use Yahoo Finance. I'm not going to start a new page on Tumblr because I don't want myself to be hacked. The notion that the very business itself could be hurt by this. Exactly. And that was something everybody was watching really closely. And actually, they put out some numbers on that. And they didn't look as bad as maybe some people thought they would. Engagement sort of would come down. It came back up. On some key metrics, even after, again, in December when they announced... And those were numbers they didn't used to give us. Exactly. Right? Yeah. This is actually opening up a little bit more than we get to see most of the time. And it was sort of, anonymized a little bit and not specific on everything, but we definitely got a feel for how things went after these things were exposed. That said, we weren't seeing Snapchat-like growth or anything like that. Again, Yahoo is still a very much an asset that has its issues. They're just trying to hold water, essentially, at this level. And finally, Marissa Mayer, does she stay or she's one of the highest paid CEOs in all of the S&P 500. Does she stay or does she go? We reported last year that Verizon would be replacing her with some executives that they had. And today she was all happy, though. She said, we made it. I'll bet she was. She gets out of there. Brian Womack, always a pleasure to see you either early in the mornings here or late in the afternoon here. Thank you very much. Thanks. All right, well, that does it for this edition of Bloomberg Technology. On Wednesday, we're going to have the CEO of ARM Holdings, Simon Seeger. He's going to join our program exclusively. A really important company in the semiconductor space, and we're going to sit down with him for a lengthy talk. Remember, all the episodes of Bloomberg Technology now live streaming on Twitter. Check it out. Go to @BloombergTechTV, and weekdays at 5 o'clock on the East Coast, 2 o'clock on the West Coast. That's all for now. This is Bloomberg.